Well, welcome back to another edition of Commodity Chat from Trader PhD. I'm Head of Market Content, Dawson Schmidt. Joining me again for a conversation this Thursday morning, is when we're recording it, is Ag Market Advisor Nick Lawrence.
Hello.
Well, Nick, kind of frame the basis of this chat this week is, lots of headlines going on in the markets, whether they're actually moving things or not. But I mean, there's just a lot of things that are just hard to ignore in terms of just current things with China, with the Strait of Hormuz, upcoming reports. July is, of course, always a busy month when you got not only just your regular headlines, but also thinking about weather and all these reports that are coming through. Lots going on here.
For sure. We're in a phase where the market is awfully noisy with competing headlines, right? Some really bullish, some really bearish, and boy, if you're not careful, you get information overload, and you end up just standing there like a deer in headlights.
Yeah, definitely. And yeah, you mentioned some bullish, some bearish, and I guess, it's kind of easy to start off with the bullish news, just for things that are currently happening this week. Of course, is that on Wednesday, USDA did confirm that China bought 472,000 metric tons of soybeans. Of that total, 136,000 tons were for the current marketing year of 2025 and 26. 336,000 metric tons were for the upcoming season. And then this morning on Thursday, we did get another flash sale from USDA saying that China bought another 136,000 metric tons for the upcoming season. Um, those larger flash sales did follow reports from, we had positive trade on Monday, and then Tuesday we got some rumors that China was buying soybeans from a couple Bloomberg and Reuters reports, um, saying that they're going to come in for some purchases for that September through November timeframe. As we're sitting right now, we're looking at total commitments that the White House says that China is going to buy of those 25 million metric tons, still only at 2.7%. So, I mean, there's still a lot of work to do if China is truly going to come up and say what the White House says that they're going to do. I guess for the short term, we're getting some positive news here.
Yeah, and they're kind of starting to build that up, build that position up a little bit. I don't think they're on sale nearly as much as they would kind of hope they would be. In maybe another couple months. I'm interested to see if they 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 let this thing kind of come to them a little bit and see if they can scoop some more up on more of a fall low type situation.
Yeah, and when you think about the timing too, I mean, looking at this chart here, um, for that October delivery time frame, it was hard to ignore that, US soybean prices are coming more in line with, I guess, Brazilian prices. This is a flat price, so this does not include transportation or anything of the sorts. But when you look at this, I mean, it looks like the US is becoming more competitive with Brazil for the time being. There's other data out there that's showing that, we're still overpriced compared to Brazil when it comes to, China doing the buying. But in terms of, the spread between that, we have less of a premium as we've had over Brazil, just this last, I guess, couple weeks now. And so that's dipped quite a bit. So I guess what I'm trying to say is, at some point or another, it kind of seems like we're not only seeing China having that political incentive, I guess, to be buying US soybeans, but I guess from an economic perspective, they're also having a little bit of that incentive.
Yeah, and I guess that this should probably widen here, even more in our favor. Again, I think as time goes on, right, as they deplete supplies, their fresh supplies, and then as we get into our harvest in another, couple months, they should obviously diverge, right? They're more of their glut of supplies should be kind of off for market, and then we should have a glut coming in, and those prices should continue to improve our competitiveness.
Yeah, definitely. And sticking along the lines of bullish news, of course, I don't think I mean, we slightly touched on this maybe last week, but it's becoming a little bit more prominent this week, of course, is that hot temperatures and drier conditions are expected to merge in the plains and upper Midwest come next week. Um, potentially bringing the risk of stress to an area of, places that have seen lower moisture. So Planalytics specifically is expecting a strong heat dome expected over the U.S. interior, planting intense heat squarely over the plains. Index readings could get up to at least 110 degrees Fahrenheit, and lows will also be elevated during that time frame of, overnight lows of 70s to lower 80s. So high temperatures, are expected to bring a little bit of crop stress to some of these areas. Kind of going to be interesting to watch, limited precipitation in the forecast following this weekend, especially for, the Dakotas, Minnesota, Iowa, Wisconsin, Michigan, and Nebraska, some of those main Corn Belt areas, and then northern Illinois, Indiana, Ohio. While the southern eastern Corn Belt will get some rain, it seems like this week. So it'll be kind of interesting to see how this shapes out, if there truly is going to be a lot of stress. I don't know. I wanted to get your thoughts on, do we have enough moisture throughout this season and kind of mild temperatures to where it's not expected to make a huge difference?
it's interesting when you look at it on a big picture level. Yeah, I guess it's hard to argue that the crop is getting bigger than the high water mark we've kind of already set. Um, but then also, it's hard to argue that we're shaving enough bushels off that the market really needs to price ration or be worried at this moment in time. I'm not saying that it can't get there. Um, this is a futures market. It's pricing in, future supply and demand. But just for me, my vote is more steady Eddie. Yeah, there's some issues around the belt. There's definitely no arguing with that. But again, by and large, I'm just not 100% convinced that it's really cooking this crop to the point where we need to really be worried about production, at least as it stands right now. And so I think the market's going to continue to look at, crop conditions and those types of things. And I mean, boy, before you know it, we're not too far away from, all the crop tours that be and really starting to get an estimate on the potential that's out there.
I mean, so you bring up crop conditions and the USDA on both a corn and soybean standpoint has been, crop conditions aren't amazing in these weekly reports that the USDA is putting out, but it's not like they're, falling off the face of the earth either. So I mean, it seems like things are about average or maybe doing all right. Is that this kind of the same thing that you're hearing from
That,
producers?
and that's my point. Yeah, I just I definitely have producers in certain pockets that are not happy with where they're at prospect wise. I have producers that have flip flopped on what they expect come this fall. They went from dire straits to now they got a bin buster or vice versa. And then whatever, there's it's kind of it's all over the board. And I think when all that comes out in the wash and it all averages out, it's average, you know, right now. Um, and so I that's kind of I drove through that southern portion of Illinois right there over the fourth, and there is a swath through there that is struggling. Extremely uneven stands. You can see heat stress through there because you just don't have the root system to support themselves. There is a pocket down there that's stressed, but anyway, yeah, I just think when it all comes out in the wash for right now, I think the market is seeing average,
Yeah.
not getting bigger, not getting smaller, average.
Yeah, definitely some things to consider here moving forward. Kind of a bigger news, whether it's, this was kind of bigger news yesterday on Wednesday as, energy markets were rallying. pretty hard, even though, corn and beans and wheat kind of failed to go with it. But President Trump did say that an interim ceasefire agreement was over with Iran, and the United States could launch new strikes on Wednesday following Iranian attacks on U.S. bases in the Persian Gulf. I really didn't see too much for, fireworks in the Gulf in terms of attacks really picking back up. But I thought something was really interesting. On Tuesday, the Treasury Department did revoke a waiver that allowed the sale of Iranian oil following attacks on tankers in the Strait of Hormuz. So basically, it kind of just seems like, we're back to this tit for tat. Is there a ceasefire agreement? Is the Strait of Hormuz truly open? We got that, risk on trade again on Wednesday. Things are a little bit quieter today, but at least it seems like markets are, I guess, still a little bit on edge, outside of the grains and oilseeds type of situation.
Yeah, and I wonder. Um, you can definitely sense his frustration with just lack of progression. Um, as far as the chessboard is concerned, I what's next? And I think the market is defaulting more towards the taco trade, right? Like, okay, yeah, he's frustrated and but like the market's still defaulting to maybe we've seen the the worst of it in a sense, as far as restrictions on trade and those types of things. Like that shock value is already kind of gone, and the market just doesn't see much risk in whatever escalation that he may be threatening. To me, it seems that way. So that's kind of the way I'm reading it, and so it will be, I guess, interesting to see, I guess, just how it's escalated and if it re affects things. Right now, the market doesn't really think it's going to.
Yeah, I mean, from what I've heard too, specifically regarding the Strait of Hormuz, is that a lot of these tankers that actually got through, like we saw daily crossings get all the way up close to 60 in the early days of the ceasefire, actually starting trailed off since then, but we're still elevated from pre-ceasefire levels. A lot of what I heard is pretty much it's basically we're getting these ships out of the Strait of Hormuz, and nothing's really going back in. Like it just doesn't seem like trade has fully resumed. People are in like insurance companies and shipping companies are just still on edge to know that it's truly going to be a safe route. And so we're just seeing a lot of these passings, pretty much ships getting out of the strait, and there actually was some visuals of, there was mainly convoys is how ships are getting in and out. Basically, can we protect them? So we got to stay together. Um, so it still seems pretty slow going in there.
Yeah, but again, I think the market just really isn't sniffing much of an issue with this re-escalation or his frustration that he's got with these negotiations, um, which could be a mistake. Market could have it wrong, no doubt about it. But we'll see.
Yeah. Kind of lastly for the news of the week, Friday, USDA is going to release its July WASDE report, updating our supply and demand estimates for both the U.S. and the world. Ahead of the report, we do have some Bloomberg surveys with analyst estimates. It kind of seems like the general consensus right now is that corn ending stocks could see a 61 million bushel reduction from the previous month. Soybean ending stocks are expected to be 22 million bushels higher from the previous report, while wheat bushels are going to be 26 million lower on that carryout from the previous report. So, I mean, the market's expecting some changes. I'm wondering if this is, a little bit of an adjustment, mainly on the acreage side of things, that the USDA is supposed to come in with slash production. We did slash um, that wheat acreage estimate. So I think that we're automatically going to get some lower ending stocks in there.
Yeah, as far as corn and soybeans are concerned, over. over 300 million bushels there on soybeans, and kind of progressing the wrong way. That the supply is getting bigger and bigger, and um, South American production, as we'll see in a little bit, isn't helping that. Just the global demand and the global production is just it's just high. And then oilseeds as a whole, and then on that corn side, just barely sub 2 billion bushel, and still just kind of floating around back and forth on that 2 billion bushel number. Um, and so again, a little bit more of just a steady eddy as far as uh, the supply and demand balance there. Um, seems more average, less threatening, more neutral. Kind of, I've been using that neutral word as far as our ending stocks are concerned for what over a year now. Obviously, wheat's tightening up there just a little bit domestically, uh, not a little bit, a lot of it, and domestically, and we'll kind of see how that ends up coming out. North American wise, I know Canada doesn't have much of a spring wheat crop, and so wheat and export positions globally could be interesting here over the next, I don't know, 6 months or so.
Yeah, I mean, looking at the world numbers, I mean, yeah, we're expected to get a 2.3 million metric ton reduction on the corn side of things, very, very slight increase on soybeans, and then a 2.3 million metric ton reduction for wheat too. So I'd be really curious to see, I guess what the USD, whether they're right or wrong, what the USDA does end up coming out with, as these reports move forward, because of the fact that we're watching global wheat production pretty closely. Um, yeah, Canada is projected to have record canola acreage. That's digging into what they have planted for wheat. Seems like other countries are kind of scaling back, all besides Russia. And then, I'd be curious too to see how things move forward with that Australian crop too, because it seems like they've been getting the moisture that they've kind of needed here early on. They should just be finishing up planting, but the 30-day precipitation has been above normal.
And how many acres
Um,
did they plant?
what's that?
How many acres did they plant? You know what I
They,
mean?
right, they definitely reduced acreage, so I mean that's already a known,
Yeah,
or not necessarily known because of course those estimates can change throughout the season, but
that's my
like
point. Yeah.
yeah, they reduced it by at least maybe 20% is what the government's coming out with. Um, and so that is kind of already getting factored in. But then you look at, yields might not necessarily get the big hit that people were expecting so far with El
Right.
Nino, but we still have time. Definitely still have time for El Nino
Yeah.
to kind of come in full force if that definitely becomes a problem before their harvest.
Yeah, and so like I say, I think Australia was incentivized to boost those canola acres, and the producer, Australian producers. So yeah, where those acres kind of end up, I think is going to be interesting also.
Yeah, definitely. I mean, you brought up a good point too. I wouldn't mind touching on this as well as like, yeah, looking at our actual carryouts is like, when you look back on the corn numbers of, you know, expecting that corn carryout number to drop this month, you brought up a good point that, we're still not too far from that 2 billion bushel carryout. And it just seems like, yeah, demand remains phenomenal, but, the supply side is just really still overbearing on a lot of what this market could see. I mean, can we even, is there still a concern that we can't, have this bullishness continue just based on our supply and demand numbers domestically?
I mean, it could, that core number could continue to tighten. I mean, it's headed, that direction. But every time it's kind of dipped below 2 billion bushel, it's found a way to perk back up, and so I think, this next, this 26, 27 ending stocks number, we'll kind of see how it, does it find a way to perk back up, I guess, is all I'm trying to say. And maybe not, right? I mean, we're gonna have less wheat to feed, that type of thing. So, even more corn there. as far as feed use is concerned, and then just the export part of it. So I mean, there's definitely a case to be made that corn could get exponentially tighter. I'm just the the pattern hasn't been so is all I'm trying to say.
Right. And I mean, exports are still going to become, we're kind of getting the time period where exports are less important, but as we near harvest and exports are projected to pick up for, both or all of the corn, beans, and wheat, kind of seems like, the dollar has still been pushing to the upside to where I don't know if that would be a little bit of a detriment to where when the exports become more of an in focus, if that starts to become a negative.
Yeah, and I mean that is a good point when you kind of look at some of those macro factors, the dollar and interest rates and crude and those types of things. The dollar perking up a little bit, kind of breaking out of that multi month kind of trading range, just right below 100. Seems like it wants to drive up out of there. That's usually not supportive for our exports. And then interest rates, you know, still kind of probing that the higher, yep, the higher in there, and really not looking like they're going to go, not really looking like they're going to fall much here in the medium term. That's usually also not um, bullish commodities as a whole. And then, crude, yeah, it's popped up over here over the past couple of days, based on, escalations. And I understand that, the petroleum products are relatively high to crude. And there's that, that what we call the crack spread is pretty wide and should stimulate some crude buying and should be supportive of crude prices here in the short term. But ultimately, I think even when that gets balanced out and we tail off, driving season, and maybe there's some more resolutions in this Iran situation. Um, OPEC just kind of falling apart. I guess like a little bit longer term, does crude continue to work lower? Is the case I'm trying to make ultimately there. Those bigger macro level things, you know, over the next 3 to 6 months don't seem that supportive.
Yeah. Definitely going to be interesting to watch that just because, as you mentioned, we're starting to kind of, you know, flip the script a little bit in terms of the types of things that we're watching. Like, yeah, we're covering a lot of breaking news, whether it be the weather, but yeah, there's going to be some different things to look at here moving forward, just because of, we're getting past the, I guess busy side of the growing season.
Yeah, in any time, the market has such a big, washout or move like it's had, both ways, both up and down. You've really got to kind of try to turn down some of that shorter term knee jerky type headline news and that emotional stuff, and sometimes just refocus in on this bigger picture. Where are stocks you use projected to come out at? How's that relate to some of these bigger bigger tail or headwinds? If you're looking at it from an end user, commercial type level, what are those bigger players preparing for? Are they preparing for cheaper commodities or more expensive ones? And sometimes it is kind of as simple as that.
Yeah, definitely some great perspective to keep in mind. And again, Friday, the July WASDE will be out at 11 a.m. Central Time. We're gonna have a breakdown after that for sure, at least on the mobile app, and then probably talking about it again next week. But I think we'll end it right there. That'll do it for this episode. I'm Dawson Schmidt.
And I'm Nick Lawrence.
This has been Commodity Chat from Trader PhD.